welcome back to another episode of Reinventing Finance. I have a interesting guest today. Whilst we were talking, he mentioned he's trying to combine a startup with 100-something-year-old culture, which is, I think, if you can manage it, the best of both worlds. But maybe, Phil, you can tell us a little bit more about yourself. Who are you, and what do you do?
Hey, Nikolaus. Firstly, thanks for having me.
Of course.
Reinventing finance. I kind of feel like it's disrupting, right? That's what we're trying to do. So a little bit about me. I've been in the insurance industry 38 years. I started very young. I started
They
in
got
New
you young.
Zealand.
That's good.
Yeah. I'm very young at heart. People will tell you that. I started in New Zealand. I started my career in a place called Wellington. I've been in Marsh 28 years, and in that career journey, I've worked in Auckland, Melbourne, Australia, Beijing, China, Melbourne, Australia, Hong Kong, China, and now in the UK. So it's been a journey. I started out originally as a financial lines broker doing professional liability and D&O, and got involved in the .com boom and sort of the joys that sort of delivered. I've placed, if you know anything about yachting, my team have done 2 America's Cup challenges end to end.
Okay.
So we've had a little bit of, sort of a move into that space. But I've always had this involvement in Affinity and primarily in the automotive space because I came from an automotive family. So, what I do, manage my first warranty claim when I was 14. Working for my father's service depot. So, that's the background. In terms of the Affinity focus, in proper sense, it started at around 1993 when I was handling programs for accountants and insurance agents for their PI programs, which was an Affinity distributed solution, right? And ironically, it was embedded. So, I know there's lots of noise about new embedded programs now, but, my tracking on that recently for a presentation I did in Brazil that's been around 75 years. Within that business, I ran in the Pacific, the Affinity business for Marsh there. In China, I did a startup for Marsh, started with 3 people in around a table in a windowless room and
What
built
type
a
of
very
startup?
large. It was basically working for a client who wanted to launch a first of type program in China in the automotive space doing extended warranty and motor insurance and just trying to grapple with, this is back in 2012, what was a very challenging sort of market in China. From that, then was asked to run a regional practice again across the Asia region, which included at that stage India. So I had China, India, Indonesia, 3 of the top 10 most populous countries in the world.
Very homogeneous markets,
Fortunately, I love cricket and I lived in Asia, right? So I sort of had a easy affiliation into that space. And then in the middle of COVID, was asked if I would relocate to London to sort of try and figure out how we federated our Affinity business globally. And that was 3.5 years ago, where we've always had Affinity business in Marsh, but it was run very much at a country level or in some cases a regional level. But we didn't really have a common sort of call to arms and a common action to deliver to our global accounts. So that was, I moved up here in May 21, started the job here, and here I am 3.5 years later, living in London.
Perfect. I mean, you've already mentioned, I guess, the reason for centralizing it is because you have very large clients and they want one counterparty to orchestrate these things.
I think the misnomer in the Affinity world is this is all about a client coming to you in a country and saying, I want to distribute a product to make some money, right? The reality is the global clients are saying to us, I'm keen to add a product to my ecosystem to make my core offering more attractive, but I need to do it in a consistent way. Now, how do I achieve that consistency if I launch in Poland and Brazil and Indonesia, just as an example, right? And that was I guess, the challenge we were looking to address as an organization, because just thinking about those 3 countries, 3 different languages, 3 different regions, 3 different sets of regulations, cash before cover, payment in arrears, some do premium financing, some do blah, 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 blah. That was the sort of the catch cry of why we wanted to internationalize what we were doing in the Affinity space. So we're trying to transform our business to become far more engaged in the client pain point diagnosis, thinking about the customer journey, figuring out how we can deliver it digitally, and breaking the products and services down so the pricing of the same is very transparent. Now, on the Marsh side, we're a product distribution engine, right? We take products developed by carriers, we distribute them with clients, we use our licenses around the world to get that done. So, in Marsh Affinity, we don't want to be all things to all people. In fact, we went the other way and said, here's a list that we publish of the things we don't want to do, because we've figured out voluntary agricultural programs.
Elaborate.
Right. So we always had an example of, in Indonesia where, we'd get groups of farmers come to us and say, oh, could you help us with a program?
Mm-hmm.
And we would go under that sense to distribute a product on a voluntary basis along those lines where there's no compulsion to purchase. Very difficult. But if, for example, and we do this
because of uptake or negative risk selection, or
no, it's just cost versus return, right? It doesn't make sense to deliver a voluntary program. The end user ends up paying more because the distribution costs are higher. Yet, for example, a financier in Latin America comes to us and says, I'm loaning a lot of small value, high volume loans to subsistence farmers who need some form of protection as part of their delivery. Could you give me a product to embed into my solution? Yep. And the answer is yes, of course we will do that, because we can deliver it to the client in a far more cost-effective way, which means we keep the cost of distribution down. So that's just an example. We have 4 key sectors in Marsh that we're focused on. So the automotive sector, the sharing economy sector, consumer electronics and machinery, and sponsored programs. So by virtue, so sponsored programs itself breaks into a number of subsectors. Franchise would be one, where we're providing a property and casualty solution to a franchisee of a franchise. We do a lot of sports business. So typically amateur sports clubs in a lot of countries around the world will embed an insurance solution into their membership, because they want to make sure the participants have some level of liability coverage and personal accident coverage, right? So we do a lot of sports. A third thing we do is a lot of trade and professional associations, and then trade association sits within that. And then the last part we do a lot of is in the entertainment area, where we're doing parametric weather triggers around everything from sort of wedding insurance through to school fetes to rock concerts.
Okay.
And that includes things like ticket cancellation in there.
Sure.
And within those subsectors, we've got, there's quite a lot of variation. And then in the automotive business, we're working with automotive manufacturers, dealers, financiers, fleet companies to deliver automotive and ancillary products in that space. And then in the machinery and electronics, it's adding accidental damage and warranty coverages to everything like mobile phones, if you can see it on my screen, through to earth moving and construction equipment. So those are the 4 things that we've chosen to focus on within the Affinity world. And by virtue of that, there's a whole bunch of things we don't do.
For example, travel, you don't seem to be doing.
We would do travel within our sponsored programs because our clients may have a need for an embedded travel solution. So, for example, we do a lot of banks, right? So if you sign up for a credit card, it might have free travel insurance, then we would do that. Would we? You're
not trying to get Ryanair to get the top-up cover in that checkout.
We provide consulting advice around that, but typically in that purchase path, we would be a frictional cost. There's not a lot of value for us being in that space. We do it because we have some relationships with clients where they have global challenges and they want to, again, have a consistent delivery. So think of some of the global airlines, we definitely talk to them. But some of the regional and in-country airlines, for our cost model to work in that space, it just doesn't make sense.
Makes sense. Okay. You've kind of alluded to it, but maybe just to kind of drive the point home, what's your right to play? What are the problems where your clients come to you and are willing to pay for as well?
Yeah. That's a good question. Right to play to me kind of breaks into 3 things, right? One is our history and pedigree. So we've been running Affinity business that I can track back more than 30 years globally. So the first thing is there's not much we haven't seen and haven't done. The second thing that helps us is our global spread, right? So if a client comes to us and says, use the example I used before of Poland, Brazil, Indonesia, I mean, we could do 60 different country combinations and still have people on the ground. So
Mm-hmm.
we have that ability to deliver globally, right? So it's global solutions delivered with a local footprint. I think the third thing in Marsh is a 154-year-old company. We have size, we have scale, we have leverage around the insurance markets, we have leverage with our technology. So we again have that ability to take very complex programs and deliver them on a multi-jurisdictional basis. We can also bring that locally, and do something very local as required. And the last part I would make is that, we have a great client relationship model. So when you think of a lot of affinity business, it generally tracks back to a large organization wanting to build a point of difference for its client base, right?
Mm-hmm.
It may not be directly, but the ownership of that affinity program will fit that way, or it's an association or something like that. For us, bringing the tools to bear is not difficult because we've got the bandwidth, right? We've got 1,200 affinity practitioners globally sitting in 60 countries. So our ability to deliver I think, is first class because we come from within that Marsh framework, and then we've got that ability to be nimble and to push it out into multiple countries. I think the other thing that makes us a little bit different, it's the approach to the ecosystem model. So, I make the point, it's not difficult to be an insurance broker. A client can come to you and say, buy me a property insurance. I go buy a property insurance. I put a price in front of them. And I don't want to in any way denigrate insurance broking because it's incredibly complex depending on the risks and the specialties you deliver with, right? But in our world, if a pizza parlor says, can I have insurance? That part's not difficult. But if a franchisor says, I'm delivering a pizza franchisee, and in my ecosystem, I have to deliver not just the insurance, I've got to deal with the pensions and the health and benefits and my supply chain exposure, all of a sudden it becomes a lot more complex.
Mm-hmm.
And our ability is we've got the capacity to deal with all of those sort of competing risk exposures when we're building programs. So the ecosystem approach for us really works. It's how do we form part of a client's ecosystem and deliver the risk and insurance solutions that they need to make their product whole, right?
Mm-hmm.
That I think sets us apart. And then the last part, it's our ability to integrate into the value chain. So, in a program, we might be the digital delivery, we might be the insurance broker, we might be going and finding the reinsurance, we could be building the captive capacity. So we're helping the client distribute their own capital into the ecosystem of insurance. We could be providing the advisory. We could be out there, doing property surveys. We could be advising their board on directors' exposure. We could be helping them with cyber incidents, blah, blah, blah. I can go on and on and on, right? It's that ability for us to come to a client and back to that diagnosis point of, what are your pain points? And sometimes the pain points don't manifest themselves as insurance products. They manifest themselves in a range of different ways. And we have that ability to deliver to that. I think that's what sets us apart and gives us our right to play in the market.
That few companies can there might be a few that could believably fulfill such a wide scope of services, but from a kind of commercial, conceptual insurance type point of view, I think all clear. The one thing we've seen, not your company in particular, but others or large insurers is on digital capabilities. That's usually where one has just seen less believable expertise.
Yeah. And it's a fair criticism.
And it's just a question of, because it's also not, globally is much easier to deliver with people than with technology. Because very few really manage that spread, right? If you're really looking, I don't know how local Microsoft really
Oh, no,
is,
but
right?
Nikolaus, the point you're driving at is the insurance industry has been, how would I put it, behind the eight ball on delivering digital services to make its clients' lives easier. I think that's a fair statement, right?
Also, and I always believe, we have seen over the last 10 years a lot of digital product being shipped to the market without a real uptake from clients as well.
Mm-hmm.
So I would argue that there is a good reason for it, because the interaction is different, and there's other things that people tend to value when shopping for insurance. having said that, whenever you go into high volume affinity type business, I would argue, especially around either optional voluntary purchases or some form of dynamic pricing. That is really where technology starts factoring in, because you can run a global credit card program. I mean, I'm making it overly simple on an Excel spreadsheet, right? There's not, you can run these programs because it's different type, it doesn't have to be in real time. So it would be super interesting from your point of view, some lessons learned on
sure.
where you place your technology bets, where you think, it's just BS, everyone talking about
No.
API,
I get where you're coming from. The first comment I would make, I was at recently an InsurTech event, and I got asked the question about where InsurTech should focus, right? And I reflected on that and responded by saying a number of the InsurTechs I've seen that have failed have built solutions that don't exist in the real world problem.
Can you give an example?
Coming up sometimes with niche products that they think there's an appetite for, but the client is not actually seeing that as a problem.
Yeah.
Right. And you can, and I know that's a generic statement, but you can apply that across so many things where they've missed the point. What is the client's problem? And the other one is defining who the client is. So InsurTechs that I think have done well are those that have engaged with carriers to help carriers extend their products into a digital trading position, right? Where some of them have struggled is they've gone to war and competed with the carriers who have given them the capacity. And how I see that reflecting itself is when you come to acquiring clients, the acquisition of clients is actually very expensive, right? Yeah. And so how do you acquire clients? You either have to provide something that's nuanced and different and meets a client need, or you're cheap. Now, I know that we can talk about the sexiness of the customer journey and all that stuff, and that's important in the customer experience, but it's one of those two things that drives the outcome. Now, if it's on the latter, how I reflect on that, and I see this from an M&A point of view, is InsurTechs that have gone through 2 or 3 carriers in 2 or 3 years. And there's only one reason why that occurs, right? Whereas the insurers...
Ain't so great. Yeah.
No, exactly, because if you sell insurance cheaply, the claims come around and kick you, and you end up making losses, right? And your capacity doesn't like that. But if you've properly got that niche understood, and you are augmenting, maybe working with a key insurer to deliver something they want to deliver digitally, but are stuck with legacy to deliver that, that to me has been the secret of the InsurTechs that have done well. They have taken a problem and they have addressed a problem. Is that problem access to the product? Is that problem providing a multi-quote marketplace? Is that problem just delivering claims F&OL solutions that are done digitally as opposed to, calling a call center and trying to type emails? Some of those problems are actually relatively simple. And that's where I've seen the insurance industry figure out where InsurTechs, I think, have a really good place to play, is in that InsurTech space. I mean, we have support from InsurTechs. So I use InsurTechs to help us augment our delivery, because there's certain things we look at and go, either I don't have the investment availability to address that problem, or I don't have the access to enough product to get the return on the investment I would make, right, in terms of client pool.
Yep. But
if I go to an ecosystem partner, as we call them, who might be providing that solution across 10 other jurisdictions, and we say, can you help us with this? Their pricing is less because their economics of scale exist, right?
Yep.
So when I come back to the challenge of technology in our industry, it's unhooking ourselves from the legacy of, what we've got. That can be challenging for big organizations. It's figuring out the solutions that clients are looking for to be delivered digitally. And in some client models, we see the client actually wants a phygital solution, not just a pure digital solution. They want to be able to do some research, engage with someone to answer some difficult questions, and then go back and complete online, right? And then the last part about that is also doing it in a way where the outcome for the client isn't just about the experience of the client. It's about making sure the client is adequately engaged through the process and adequately educated on the products they're buying. Because you can look in the UK and go find aggregators who are delivering products. I can't comment on whether the best product or the best price, but you can read in the media there are some challenges around that.
Yep.
You know what I mean? So where we're at with technology, we are definitely investing in our own technology platform, but we are working with ecosystem partners to help us deliver that so that we can put that technology into our clients who are looking for that global consistency or the local consistency if the volume and value makes sense and we're actually addressing a client pain point.
I think it's interesting just listening to you. I feel, especially with the affinity space, where ultimately your pipeline, your product pipeline is opportunity or deal driven. So there's no way you can predictably forecast it.
We
And
can and we can't, Nikolaus. You know, I hear what you're saying, but I'll give you an example, right? We're doing a lot of work with embedded micro cyber products.
okay.
Now, a year ago, if you went to a cyber insurer and said, I want a micro cyber product with a premium of less than $25 or 25 euros, the answer was most of them would say, we don't have anything.
Yep.
Now there's a plethora of carriers who want to engage in that space because they've realized two things. The client's pain point is, the individual end user of the product is, I don't want to spend 100 euros buying myself this protection that I know there's an issue, but I don't necessarily believe it's going to impact me, right? And the carrier's going, I can't distribute a product at less than 25 euros because the administrative costs of delivering that product blow out any opportunity I've got to make money.
Yep.
So we took that on and went, you know what? We think we can build a product space because we can see a demand for it, but we didn't have a client at that stage saying, this is what I want. But the moment we orientated that into the market and said, you know, disaggregate a cyber product, do you just want social engineering cover? Do you just want scam
Yep.
cover?
Yep.
Whatever, right? That was us manufacturing products. So in the Affinity world and Marsh, we actually do a lot of that. It may not be manufacturing from scratch, but it is taking traditional insurance products, disaggregating them, innovating them, and delivering them to clients. We do the same with home and contents, with personal accident, with travel
Yep.
products, etc.
Yeah. And I fully get that. And I think from a kind of conceptual point of view, I think that, and by conceptual, I mean just the, it can be, not, it can almost be like a paper-based because it's like a group policy. You have your wordings, and then there's different follow-on processes that come with the coverage levels. But it's different than, let's say, configuring a end-to-end motor insurance product fresh.
Yes, you're right. You're right.
And what my point was a little bit around digital capabilities, which kind of I always felt when people said, "Oh, I've seen so many larger companies in that space," insurance to kind of say, "We've now built a global platform." And I think that platform addresses certain issues really well. But at some point, by definition, you'll have a capacity crunch because you just cannot really dictate, let's say, exactly the configuration of your partner. Maybe whether the product needs, whether you need to pull in some data, etc. So I think the scope of it, and I feel especially within the affinity space, strategy needs to always be overridden by opportunity. Because I think you can have a main strategy that you resource and where you invest, but at some point you just might get some business that you would otherwise say no to.
Absolutely agree. And aligned to that, then we also have a fast fail strategy, right? So sometimes we'll take an investment risk on a product opportunity and deliver that into the market. And we have a really tight reporting process around what the metrics of success look like. And if that investment isn't driving the return we're looking for, the fast fail strategy is one of how do we cut that up, get rid of that, take the phoenix from the fire and do something else with it.
Yep.
So we do that.
Do you have some guidance? Because we've seen some of the and it's interesting how you also see some of the most successful, and there are successful affinity players out there.
I don't want you to get the wrong idea. There are very successful insurtechs, and they did a great job in kicking the insurance market in the ass when it needed to be done, right? No question about that. And they continue to be successful because they stick very tightly to their recipe. The moment you spread too wide in the insurance industry, in the insurtech world or in the affinity world, which is why we only focus on 4 sectors, it becomes very hard to balance that investment return equation that you're always looking for when you deploy capital.
Yep.
It doesn't matter whether you're an insurtech, a broker, an insurer, that recipe is the same for everybody.
Oh, totally. And for 2 years, money isn't for free anymore either. So
No.
those capital returns are, if they're driven to profitability, you'll have a different equation than if they're driven to multiplying valuations towards an expected follow-on market, which has absolutely changed the equation over the last 2 years. Makes perfect sense. Would you say in your view on the programs that you run, does competition come more from similar large commercial brokers, from, let's say, large insurers, the Chubbs, the AXAs, the Allianz of this world, or the insurtechs with a different, either with a full license or an MGA?
All of the above.
Yeah.
But I'd make a point, right? The biggest competitor we have is evolution. And evolution in our world comes from non-traditional risk transfer mechanisms. So, and also this is why we engage in it, right? When you get involved in a capital allocation model with a client, the client might say, I want to take no risk, I want to take lots of risk, I want to put that risk in a captive, I want to use alternative risk transfer mechanisms, I want to do different things in my structure. That's not competition, that's evolution, right?
Mm-hmm.
And evolution builds over time. But if you're a traditional affinity delivery mechanism, that would be a competition for you. For us, again, we look at that differently and go, okay, how do we work with that? Now, the true competitors for us is really that competition is around our own ability to react to that evolution, right?
Yep.
If you've set up a program correctly with a client, yes, there can be someone who turns up and says, I'll do it cheaper, or I'll get you a different cover, or I'll do this, or I'll do that, right? Over the period of time that a program runs, that's not necessarily providing any benefit to the client. The disadvantage is if you're not evolving with your client, then actually, you're your own worst competitor, your own worst enemy.
I think you're striking a very interesting point. I always felt that you can almost compete whoever's decision makers P&L or leeway incentive structure is. If you have a national P&L versus a regional P&L, if you have capabilities to say, listen, I get it. Why don't we help you source that captive? Why don't we help you to become an MJ? So basically just to, depending on how sophisticated your partner is, to letting them in on capturing more gains of the entire insurance value chain as and when is required, which you just find it's very hard to keep up this type of expertise if you can't pull it back from an already, let's say, self-perpetuating business model, right? Because
I'm smiling because 3.5 years ago, when we set this up, our number one byline was transparency. So we sit with a client and we're incredibly transparent about where every dollar they pay in premium goes.
Yeah.
Because we want to create opportunities for them in the future to participate. And it may not be participating in the investment around the risk. It could be participating in the administration of the process or the branding or the education or whatever, right?
Yep.
We're very, very keen to do that. So you get to that model of co-creation.
Totally.
And the best, most sustainable programs are those that are co-created.
Yeah. And I think that's interesting. And if you kind of, I remember, when you're kind of seeing some headlines, I believe, I don't know, was it Zhongan and Grab, and they did this great partnerships. You're like, that's because they have this great stack. And then you're like, well, what happened on the investment side and on the cap table? And you just kind of felt that that is obviously a big boys game, for the lack of a better term. And
but there was a missing ingredient in your reference there, and that was to the insurer. The insurer had to be creative to help them build the product to take all the risk.
Yes.
Right. So you saw a classic headline of people who want a headline grab, and I get it. But in that particular model, which I'm very familiar with, there was an insurer behind them who was delivering the capacity, and the product innovation to make it all work.
And I think, yeah.
You see what I mean? It's like, and that's that evolution thing again, right?
Yeah, and I think the interesting thing is, which is why these network effects are, not every case is the same. They have different ingredients, and you can absolutely, if you ask someone who wants, I don't know, a warranty program on white goods, are you really going to start elaborating about the benefits of a Maltese captive, in the initial pitch? No, but you need to understand where these things go and when you can pull in some expertise as you
For sure.
see I would say the deal being more competitive, or your counterparty being more sophisticated in their buying experience, because they know that. And I think that is actually really, when we discussed offline, you have some very unsophisticated buyers that need a different story to start with than very sophisticated buyers, and they're been there, done that. Helps a lot. And also knowing when to say no.
Even on that point, Nikolaus, sometimes it's not that they're unsophisticated, sometimes they just don't know where to start.
Sure.
You know what I mean? So part of what we end up doing is we have a service now around an advisory service around helping them form their strategy. Like, what is your strategy? Are you here to make money? Are you here to differentiate your product? Do you want to build loyalty with your customer base? And all three of those have different levers that deliver successful programs.
Yep. But I think that's the interesting thing, right? Basically, what you're doing, in which I always thought, kind of coming from a commercial broker background myself, which is just a very commercially oriented enterprise, and to say, listen, if they need the strategy first, let's not kind of come back when you have a strategy. SDR kind of circles back. It's like, let's sit down and figure out, can we help you? And then you'll see how to price that engagement depending on what you see as an opportunity, whether you say, okay, we want to price it directly, or we'll bundle it with a later deal. But I think that's the interesting thing.
It might be the strategy. It could even be, some of the advisory work we're doing now is around the customer journey. How does the product actually engage in your purchase path? Now, a traditional insurance broker has never got involved in that. But that's something we've figured out we needed to do, and we built a network to deliver that across our business globally, because we saw that becoming a fundamental challenge for our clients around achieving the successful numbers they want to get to. And the last part that we've also done in that space, just while we're on it, is now we're full on into providing data services to clients, literally helping them figure out, what their data is telling them around the delivery of an affinity program, which means dealing with disparate data sources, automating workflows, providing the right tooling to deliver the insights, and then also taking that insight and actually, providing them with something profound from it. And I always make the point, penetration and retention statistics are not insights. That's just program performance. What are they telling us is the insight, Yeah, it's an interesting world.
So I think we've covered a lot of the parts about, why clients take you, which kind of verticals you're interested in. I would just like to understand and kind of rephrase the question, rather than, being a powerhouse that is Marsh, you have a benefit of, let's say, larger tender, having some incoming business by the nature of what you've built. You're standing on the shoulders of giants, kind of thing. Do you go hunting as well? And what would be your hunting map right now? Where
most definitely. So if you want to be a business that continues to invest, then you have to always unlock new cash flow, right? It's as simple as that, because expenses will catch up with you. So when I think about the area, the sort of the swim lanes that we're hunting in, a lot of conversation around embedded solutions, right? So that's where that product is typically embedded into a non-insurance product and bundled up and sold together. A good example of that would be commercial tire insurance. So not vehicle insurance, just the tire, sold as a mandatory solution within a tire retail operation. That would be a good example, right? Where we put an embedded product into that space.
How technically, just out of interest, how digitally savvy do these? Or is this pretty much just a commercial?
They're mandatory solutions. The actual delivery is not necessarily technologically based. Sometimes it is, because they might have a voluntary upsell off the back of it, right?
Yeah.
So therefore you need the technology to deal with that. Other times it's the F&OL piece that's digitized. So how
Understood.
does the tire owner put a claim in when a tire goes pop? All
But
right, that's
the
an
point
example.
is as much technology as required, not to say, here, I have an
correct.
API, please take it.
You don't need APIs for that
Yeah.
stuff.
Yeah.
You know, we can deal with that. The other one is micro products. So this is where we are, we're basically disaggregating traditional insurance products and making new products out of them. So I gave you the cyber example, but I'll give you another one. In travel insurance, we might have a client who just says, I want a parametric solution around trip delay, right? I want my clients to be given a voucher if their flight is going to be delayed by 4 hours. How do I deliver that? I don't want travel insurance. I just want that. Or we had a client recently who's come to us and said, I'm only interested in baggage damage. How do I provide a parametric around baggage damage, or a product around baggage damage, right? Home and contents. How do I just deal with high value jewelry? I don't want anything else. How do I deal with personal legal expenses when I'm having a fencing dispute with my neighbor? So you see what I mean? Like, so disaggregating traditional products into micro products is a classic example. In one of our Asian countries, we provide a vehicle product which is covering the emblems on vehicles. Nothing else to do with the vehicle. Just as someone comes and levers off the the vehicle emblem, it's covering the replacement and the damage to the car.
Okay.
So you see what I mean? Like that's micro products, right? So that's the second one. I think the other one is coming out of the gig economy, and that's dealing with what I describe as micro SMEs. So these are small enterprises. It might be, a driver in his car, or a driver in a motorcycle, or something like that, which is a micro enterprise. This part of the market is growing, and it's very underserved. So we see opportunities there. Data-rich programs that generate a lot of data. They're unwieldy and they're hard for a lot of organizations to manage, right? That's a challenge. So we look at that and go, that's a great place for us to play. And then the automotive industry, just in its largest form, there's still countries in the world where people are acquiring their first vehicle for the first time in their family. There's new dealerships opening up. There's new ways of financing. There's new ways of having shared ownership, subscription platforms, a massive amount of innovation in that industry. But the price of entry is high because a lot of that's technology driven, and also you've got to have that embedded sort of expertise around how auto works. I would touch on some geographies. So we have a massive focus in Asia and LATAM. They're just outright high organic growth markets. And then niche players. We have niche markets within Europe, within the Pacific, two examples that come to mind, and probably in some parts of the Middle East, where there's opportunistic plays that we can take on board to look to grow. So our growth strategy has many different levers, which kind of always puts us in a position of being, always looking for something new, but never really dying in terms of not finding it, if that makes sense. And that's that's kind of a size thing. It's also come through the focus, having that very focused strategy on the 4 things that we do. We're different.
We've covered, I think, a wide range of topics. Just kind of before we wrap up, is there like a thing, a question, a topic that you feel when thinking about Affinity, embedded insurance, however you wanna call it, that sometimes gets missed, that makes sense to just kind of put a statement out or leave people, with some further
I would
thoughts?
say, I would say a couple of things people don't always understand about Affinity. It's product agnostic. All right, so all insurance products can be in the play of the Affinity world.
By the way, I think that it's a very key message here, especially for carrier-driven innovation.
Correct.
And they ask me to say, where can I put my accident insurance in an embedded place? Like, listen, you're not going to solve anyone's problem, because the likelihood that it's a great channel, it's a great product, and that's the only product, and just because that's who you are responsible for, there's better supply and orchestration out there. Yeah.
But Nikolaus, that's also playing to the point, which is my second point when I think about Affinity. It's focusing on the client's pain point, right? And the
Yep.
insurance industry sometimes builds great solutions to problems people don't always have, or sometimes don't recognize they have, right? If you start with a client's pain point of I am trying to achieve X, or my problem statement is ABC, then that's how Affinity comes to be. Because Affinity is a mixture of distribution, analytics and insights, product development, and customer experience, and all of them intertwined together to deliver. And sometimes what I see in the Affinity world is we're focused on one thing and not necessarily all. And the last point I would make, and it is sometimes a negative, there's a lot of press that comes out about exponential growth in key segments. And, sometimes, I'm not saying it's exaggerated, but sometimes it creates a false positioning in the minds of various stakeholders and how programs are developed and where they see opportunity. And then the real opportunity doesn't match that. So we're always very, very cautious when we size programs to go, what do we think reality looks like? And, sometimes we lose programs because we're too realistic. I'm okay with that. I don't mind that. I'd
Yep.
rather we go into, it's back to that transparency model. We go into an engagement with a client. We're very transparent what we think success will be, what it will cost to get there, and who needs to do what. Product agnostic, addressing the client claim, pain points, delivering those 4 different elements to get the right program. And then Affinity's a fun place to be. I always say to
It
people,
really
come
is.
work in the best part of insurance.
I think the one thing which I like, why Affinity is a very interesting place to be, and why I also quite like when some organizations, I'm kind of the post-innovation area. I think that's innovation has been a bad rap because it was like people just playing around and forgetting, you need to generate cash. It's a business. This is not a hobby. And I really, what I like about Affinity is because you have a partner who you can co-create, but also has a strong opinion. It's a knowledgeable partner. It's different than an SME or an end consumer or even a smaller, broker or agent. It's a great way to unlock internal disputes about something where you can spend a lot of time arguing, but ultimately it's about the client. And I think it's such a great unlock to deliver how to deliver new growth and how to work on someone else's clock. How to drive change. And I think it's that's a great because you have this unlock that you can bring outside into the organization. So you without losing face, if you like, can just kind of unlock and start doing stuff.
It's recognizing there's 2 clients. There is our client who is the sponsor or the
Yes,
brand, and then there's their client. And
of
I'm
course.
really conscious of the fact that that second client is their client, right? We never lose sight of the fact that, if you go into a car dealer and buy a car, no one's going to say, hey, can I have that Marsh extended warranty I've heard so much about, right? It's never going to happen.
Yeah.
Right? It's all about we rely on the engagement and the sophistication of our client, which is the sponsor, to know everything there is to know about their client. Now, we can provide support and advice and our expertise around product development, customer journeys, and all that other stuff. But we need them to own that relationship, because if they own that relationship, then the engagement of making the program work is going to be far higher than if they don't. So, I'm always really conscious of the fact that we become the trustee of some major brands around the world. It's their brand and it's their customer. We're here to facilitate and help them deliver the requirements of addressing their pain points, right? Or whatever that might be. But it's their program.
Yep.
So that's another thing that makes it exciting, right? Your sustainability in a program ultimately is about the inputs you put in and continuing being able to evolve and deliver outcomes in a changing world. I mean, I know that's, again, quite a sort of generic statement, but when you boil that down, you got to run hard at change, because our clients face change in their competitive environments every day of the week. So we have to as well.
Which is why my point is, I think if you want to drive change in an organization, I think what hasn't worked really well, fund a startup, put it very far away from the mothership. They might do well, and if you're the best shareholder, that's great. But that's not how you drive change in the organization. You drive change with winning. And I think by being in control and having the responsibility, however it works out, on these type of programs, I think that's a great place to validate how
Agree.
fast you need to be, etc. And I think, because you cannot hide behind internal politics, which I think is one of the biggest competition to large organizations
I've got to say,
succeeding.
Nikolaus, we're lucky, or maybe we're not lucky, maybe it's by design. The support we get from the MMC organization, it just makes our execution so strong, right? Because remember, I've got Mercer in there, I've got Oliver Wyman in there, I've got Guy Carpenter, I've got all these other parts of our business, as well as my cherished Marsh colleagues. Our Affinity business success is predicated by their engagement and their engagement with their clients.
Yep.
Right. So that kind of, I think, was summarizing what I enjoy about this business. Is bringing those parts of the organization together to mold a bespoke solution for each program.
Yes.
Because no two programs are the same, right? But I mean, hey, it's been interesting conversation to get us through the journey of what Affinity is.
Phil, thank you so much for your time and your insights, and I hope to see you on the circuit sometime.
Appreciate it. Take care, sir. Cheers.
Take care. Bye.